Hi, and welcome to Reducing Risk. It's a specialty crop insurance webinar series. And my name is Marissa Christie, and this is Dakota Moore. We work for the Kentucky Center for Agriculture and Rural Development, or the Kentucky Horticulture Council, respectively. And just to get to know us a little bit better, I have worked with many diversified farms over a little more than a decade now, including looking at ways to manage risk. And Dakota, do you want to introduce a little bit about yourself?
Yes, I'm new to the Kentucky Horticulture Council this year. I started in July. I've got a background in greenhouse production, public garden management, and floral design. I'm excited to learn about crop insurance and help educate some others with this project.
So this first webinar is Crop Insurance Basics, kind of a 101 tutorial on what's out there and what's not. This is all brought to you by funding from the Southern Extension Risk Management Education, which is actually coming from NIFA, National Institute of Food and Agriculture. And from there, I'm going to let Dakota take it away.
Sure. So today we'll be talking about just the basics of crop insurance, especially related to specialty crops. It'll be more like an overview of kind of the topics we'll be going into more depth on throughout our series over the next year, including videos and live webinars. We'll have the links for you to register for those live webinars down in the description. First, I just want to start off with some numbers for specialty crops in Kentucky. In 2020, there were over 4,800 farms in Kentucky growing specialty crops, and they grew those crops on 143,000 acres. The last number is less than 6%. That's the total acres of peaches in Kentucky that were insured, and 62% of all peaches in the US were insured. Peaches were the only crop that was specifically covered under an individual crop insurance plan. And there's 39 crops that have those individual plans in Kentucky. So only one of those was being covered. That shows a lack of crop insurance coverage for specialty crops here in Kentucky.
So we're kind of leaving a safety net on the table in Kentucky as compared to the rest of the nation.
Yes, especially with the specialty crops and horticulture crops.
Because when most people think of crop insurance, that's not what they think of.
I think it's like 92% of crops that are covered by crop insurance. It's only 6 different commodities. So a lot of these smaller commodities are left unprotected. So why would you need crop insurance? You need it to protect against the loss of revenue, either because you have crop losses, yield losses, and even changes in price. And how do you purchase crop insurance? You use a crop insurance agent to help you sort through the different policies and find the one that fits best for your operation, whether that's a federally subsidized policy or maybe a plan purchased from private insurance companies.
So why do you think most people don't get crop insurance?
It's probably because of a lack of information on crop insurance or a lack of education on crop insurance, because it can seem like a pretty intense process or kind of scary to think about going about getting this. But once you realize you can get a basic knowledge of it and work with an insurance agent to help you sort through all the difficult wordings and all the different forms you have to fill out, then it shouldn't be as hard as people think.
I think a lot of specialty crop growers don't realize it's available, or they think it's going to be really expensive.
Yeah, even if their crop isn't covered by an individual plan, there are options they can do to cover all their crops in their farm, especially the Whole Farm Revenue Protection Program, which is only about 7 years old. So that's fairly new. So maybe people don't know as much about it as they should. So they can, if they knew about it, they'd be able to know there's options for them.
So where does crop insurance come from?
It's the USD RMA, or the Risk Management Agency. They create the crop insurance products, and they approve the insurance providers to sell and service these policies. So each year they create new policies and they change the existing policies. They might add new crops. They might add new states and counties where the policies are available. An example would be hemp. A few years ago, there were no policies for hemp. And then it was added for a few states and counties. Then the next year, more states and more counties within the states that already had coverage were added. So it changes every year. So even if your crop isn't covered right now, it may be in the future.
Which leads us into, who do you buy crop insurance from?
You go to an insurance agent. And that's the first step when you go about looking for crop insurance. And I would just ask around and look for agents who might have experience with insuring the types of crops you grow. Word of mouth is huge in agriculture. We get our seed recommendations, equipment reviews, and even advertisement from each other and our fellow growers. So ask your neighbor, or your fellow grower, if they've got any experience with crop insurance or specific agents. And if you don't find one based off that, you can use the USDA RMA's online agent locator tool. This tool will give you a list of all the agents that are licensed in Kentucky. And it's a pretty long list, but you'll need to make sure that they service the county you're in. Some agents only do a few counties, and then some cover the whole state. And we will link this locator in the description. And the next step when you go to a crop insurance agent, you need to make sure you've got these records that they'll use to help you find your policy. You'll need things like the farm serial number, a list of the crops you grow, the names and varieties or types, because it can be specific depending on your varieties and types. You'll also need to know the intended use of your crop. Are you going to be selling it fresh to grocery stores and restaurants? Or are you going to sell it to processors? Maybe you'll be direct marketing it to the consumers. That will all affect your policy. You'll need to know if you've got organic practices or conventional practices. Are your crops irrigated or are they non-irrigated? Then you'll also need planting dates and locations for all your crops. Policies are done by county as well as crops. So you'll need all the locations of all your crops that you want insured. And you'll need these records for at least the last 5 years. It's best if you have more. Sometimes the policies will be different if you can keep a record of 10 years.
Yeah, but it's also not like if you don't have 5 total years and you're a beginning farmer, you just can't get a policy. Even, MPC, multi-peril crop insurance, has some specific ways around that. And whole farm revenue too, as little as 3 years of history, they can start doing an estimate for policies. The bad news is the less history you have, it might get a little more expensive because it's all about the statistics.
Yes, and an insurance agent would definitely be able to help you look through those options and figure out which one will save you the most money and protect your crops the best. So the first insurance we'll talk about is multi-peril crop insurance, which Marissa mentioned, or MPCI. And that is the insurance that is subsidized by the USDA RMA. And it protects you against loss due to natural perils, living threats, and losses in revenue. We mentioned earlier the 39 specialty crops in Kentucky with individual policies. Those are MPCI policies. and the coverage varies by crop and by your county.
So
So go ahead.
some counties you could cover your apple orchard.
And then the neighboring county, it might not be covered. So it all depends on demand and of the crop in each county. So it takes a lot to rewrite these policies every year. So if no growers are growing a crop in a county, they're not going to create a plan for that until enough farmers or growers have requested it. So if you don't have coverage for your crop, there's ways you can submit requests every year. And by doing that, in time, you should get a policy for your crop in your county. And if you grow more than one crop, you'll need separate policies for each crop. And if you grow in 2 different counties, you'll need a policy for each county as well, because it is so crop and county specific.
But you don't have to purchase a thing for each crop. It's just the ones you want to insure.
Yes. Yes. And it's the MPCI is calculated using that actual production history, which is an average of your past yields. So that's why you need to keep the records if you have them with a minimum of 4 years and a maximum of 10 years. And there's different policy coverage levels from 50% to 85%, and they're increments of 5%.
And the federal government does subsidize these policies through RMA.
Yes. And so you might be wondering, what are you protected against with the MPCI policies? It's natural perils like bad weather events, fire, and even volcanic eruption if that impacts your area.
Well, I mean, you think about it, we've had dust settle in my lifetime. Well, I won't talk about how long that is in our area. So, I mean, like it really, it's a natural disaster or a living threat. Living threats don't include your neighbor's teenager on a 4-wheeler in your field, however.
Or a worker that let a fire get out of hand. That would
those are not those are not covered, but most things that could happen to your fields are covered.
Yes, including living threats like insects and disease. But only if you've used proper control measures, and that wasn't enough. So it'd be a good idea to keep records of any control measures you used when you applied things, the amount of times you applied it, because that would all affect whether your insect and disease were protected.
So can you cover organic crops with MPCI?
You can. It's they add new policies every year, but right now there's over 80 certified organic crops, but that does vary by state and county. But the coverage is either yield or revenue based. You'll have a choice. And then, and also if you do contracts, you can insure at the contract price value. And if you're in transition, you can also apply for MPCI for organic crops while you're in transition. So
while you're doing the more organic practices, but don't quite yet have that organic premium on your product.
Yes.
So, oh, that's good to know. So now let's say though, I have family across Eastern Kentucky, and some of those counties you punch in and it's like, yeah, the only thing you can insure is corn or maybe nothing. So what's available for those folks if their crop isn't listed?
Sure. We've got several options. We mentioned earlier the whole farm revenue protection. We've also have non-insured crop disaster assistance program, or NAP. There's the tree assistance program, also known as TAP. There's the Rainfall Index, written agreement, and private insurance plans. So first we'll talk about the whole farm revenue protection. And this ensures your revenue based on your past tax documents, specifically the Schedule F, instead of yield history like the MPCI. and it determines the loss based on a 5-year average or 3 years if you're a beginning farmer. And the coverage, go ahead.
I was gonna say one fun thing is a lot of the organic farmers that I've worked with over the years are generally increasing the amount of product and their market share every year. And one thing about whole farm revenue protection is you can actually, if you have demonstrated that you've grown over the last 3 years and you want to ensure growth that next year as well, it will do that. It will it's like, all right, well, I sold $50,000 last year, but this year I intend to sell 60,000. If it's reasonable for you to do that, they will help you insure it. So that's
great.
one nice thing.
And the coverage levels are 50 to 85%, just like the MPCI, but you have to be diversified with at least 3 different crops in order to be the 80 or 85% coverage level, which shouldn't be hard for people that are using the whole farm revenue. Typically, they're well diversified or growing several different crops.
Yeah, I had someone using it that was producing hay, pumpkins, and cattle, and just like the which is an interesting mix, but just like the MPCI, there is federal subsidies through RMA for this, the insurance premiums.
Yes, and the individual commodity losses aren't considered, so it does look at your whole farm. So if you are growing not just specialty crops, but you're also growing hay, and then you're a cattle producer as well, it all is covered. The deadline for this is either November 20th if you're a late fiscal year tax filer, or March 15th for calendar year or early year tax filers. A lot of these policies, March 15th is a deadline for those, but it's best to go to your insurance agent as soon as you can, not wait until it gets close to those deadlines.
Yeah, writing these takes a little while. And the other nice thing about whole farm is that it's literally available in every county, in every state. So that's the good thing. You don't have to be like, is it available? It is.
And another good thing about the whole farm protection is that the MPCI can be nested inside of that. So you would use the MPCI on specific crops that are insurable in your county, and then the whole farm revenue protection would insure and protect the rest of your production.
So if hay was insurable in your county, but pumpkins and cattle were not, you could use
the MPCI on the crop that was insurable and on the hay, and then the whole farm on the rest of the farm.
This is the program that people know about. It's NAP.
The NAP, the Non-Insured Crop Disaster Assistance Program. And so this is administered by the Farm Service Agency instead of the RMA, like the others we've talked about. And this is just financial assistance to growers of any crop with no available crop insurance. So it protects against losses caused by damaging weather events, natural events, and anything that comes from those. So it doesn't protect you against price changes or insects like the MPCI would, but it's protection against any natural event. Your loss amount must exceed 50% of your expected production to receive anything back. And the crops are covered under separate plans, but with their own premiums. So it's like the MPCI, you would have to have one for each different crop that you want to insure. And the deadline for that one is March 15th as well.
This is basically your complete disaster coverage. Please make sure you have money to be able to plant seeds for next year coverage.
Yes, and so it ensures the payments you would receive from that would be, it's based on 55% of the average market price for your crop.
So you don't like with the whole farm, you get what price you've usually got. you think about for your sales?
Yes.
Usually where this is about like, no, the market price for pumpkins is this, not the market price for pumpkins at a farmer's market, but at a wholesale terminal.
Yes.
Cool.
And then the next one we'll talk about is the Tree Assistance Program, or TAP. And this one is also administered by the FSA. And it's for nursery tree growers and orchardists. It's any financial assistance to replant trees, bushes, and vines that are lost to natural disaster. And it covers ornamental, fruit and nut, and also Christmas trees. But it doesn't include timber, sadly. But it's for anytime you have more than 15% mortality loss per stand for each disaster. And you can apply up to 90 days after the loss or disaster. So this one you don't apply for before your growing season. You would apply for it after you've got an event or a disaster that destroys your plants.
This isn't one where you have to apply and pay an insurance premium up front.
No, this happened to my orchard. I need help. So you have up to 90 days, 3 months after the event.
Cool.
So the next one is the Rainfall Index. And this one is administered by the RMA. And with this, the only insurable cause of loss is lack of rain. And that's not, you might think it's too much rain or flood. This one is only lack of rain. And there's only a few crops that are protected with it: the annual forage, apiculture, and then pasture, rangeland, and forage, or PRF.
So basically, this is just honey and hay?
Basically. For Kentuckians, it's going to be honey and hay. But those are both impacted by drought or rain pretty severely. And so how it works, it's based on weather data that's collected by the National Oceanic and Atmospheric Administration's Climate Prediction Center. So they gather data for every area in the US about past rainfall averages, and also prediction of future rainfall. And then they put that information out there, and then you have a specific area, which is a 0.25 degree grid in longitude and latitude that's centered over or placed over your growing area. And so they will have the data for your average rainfall for your area. And then you pick 2-month plans. So there's 11 to choose from. You can choose maybe May and June, or June and July. And then they look at how much rain you actually got during that 2-month time period. And you choose a coverage level from 70% to 90%. And you can only make a claim after the final amount of rain is less than the coverage level you selected.
So for easy math, if like your 2-month period, you wanted 10 inches of rain during that 2-month period, I don't think it's a good idea, but easy math. And you chose 90% coverage, that would mean if you got less than 9 inches of rain, you would have a payout.
Yes.
Okay.
But if you had picked the 70% coverage,
and there was 8 inches of rain.
8 inches of rain, you would not be covered, and you would not get a payout.
Cool. And payouts are technically called indemnities, which is wonderful jargon. And this is another one that you find an insurance agent. And you might talk to an insurance agent and they're like, you tell them what you grow, and they're like, well, you could use Rainfall Index with whole farm revenue or something, or MPCI, depending on what you want to do. So these are the ones that Dakota has introduced me to, also available through insurance agents.
Yes, and so these are private insurance plans that you can use in addition to MPCI, or whole farm revenue protection, even Rainfall Index. So you would say, I have a bad history of hail. I want some extra protection. You might be able to find a policy that would give you that extra protection against hail. You think there's going to be some crazy price changes this year. You can get additional price change protection. Maybe you have a history of people throwing cigarettes out along the side of the road and burning down portions of your field, and you want man-made or man-started fire protection. You can get a private insurance plan that will protect against that. It's kind of just doubling down on your protection for your crops. And you wouldn't have to do your whole farm either. You could say, I just want a extra protection on this field or this section of this field.
I want to protect my peppers from hail damage or my wheat from hail damage or
yeah,
whatever. Okay.
But I don't care about the rest of my crops from the hail damage. That's okay. You can pick and choose with these private plans.
So did I skip one? I did.
Yes, the written agreement. So the written agreement is, it's basically taking a plan that already exists, but may not work for your crop. Maybe your crop doesn't have coverage in that county, or your records aren't there for you to have coverage that you need. You can work with an agent to create a written agreement and maybe modify an existing policy. And it has to be approved by the RMA, but it allows you for some flexibility if you don't have a plan that works for you.
Well, that's kind of interesting because, you know, it's just if you had something like, well, you can insure apples the next county over, but not in my county. Can we just try to do a written agreement and see if they'll accept it? So this is kind of your door for that.
Yes, and not everyone gets accepted, but the insurance agent would be able to, you know, move on to plan B if that wasn't accepted. So working with the agent, they will really be able to find you something, hopefully.
And the interesting thing about working with an agent is that they actually do get subsidized to travel to you and work with you and answer your questions. So, and it's how they make their living. So don't feel too bad about asking a lot of questions and seeing if they can meet you somewhere near your farm if they're willing to drive. I've seen them do it. They will, especially if you have the right agent. You have to have an agent who wants to insure your farm.
And we should mention that they don't have to live in your state. They can be licensed in more than one state. So like we talked about, peaches were the only individual crop insured specialty crop wise in Kentucky last year. There might be an agent that's licensed in Kentucky, but is also licensed somewhere else and has experience insuring peaches. So they might know that policy better than someone that hasn't insured peaches before.
So Dakota, thank you for learning about all of this for us. We really appreciate it, myself especially. But in addition to crop insurance basics, there's actually going to be a whole lot of different webinars over the next several months, and some will be recorded, some will be live. But there's kind of a tentative webinar schedule up there. I don't know if you want to highlight some things that you're really looking forward to, Dakota.
Sure. First off, we'll be going over everything that we talked about today again, but in more depth. A lot of them, like the MPCI, will do a whole live webinar on the MPCI. We might even have a representative from the RMA speak with us to answer our questions. Our first live webinar is October 12th, and that will be on what a grower needs before going to an agent. So we'll hopefully get you ready to be able to go to an agent and have everything you need to get started. Our live webinars will be the second Tuesday of every month for the next year, ending in September. And then we'll also release some recorded videos like this one.
Yeah, I'm really looking forward to it. I learned a lot about whole farm revenue protection a couple of years ago. And since then, you know, what amazed me is that you can get coverage for as little as $300 to $500 a year to help you make sure you're giving yourself a safety net for $40,000 to $50,000 in sales based on your revenue, not your yield, and just little things like that. So we really look forward to it. Want to thank Kentucky Horticulture Council for writing the proposal that got funded by the Southern Extension Risk Management Education Center, and USDA NIFA for funding us, and Dakota for being willing to decode all of the intricacies of crop insurance and wrangling us all together to get this done.
And thank you, Marissa and K-Card for helping me through this as well.
Well, we look forward to seeing everybody in a couple of weeks, and feel free to reach out. There will be links to help you reach out organizations and to help you find an insurance agent or any other information about helping manage your risk on your farm. Thank you and have a good day.